Investing in cryptocurrencies may be as simple as a few clicks on your phone, and with cryptocurrency making the rounds in the news and in talks with friends, it's tempting to jump in. Crypto may not be an appropriate investment for you right now, or ever, depending on your financial condition and stomach for risk. But let's say you buy in cryptos and then what? Do you know how to sell your crypto or when to sell your crypto? What is the perfect timing to sell your crypto? Want to know all there is to know how to sell your crypto and the perfect guide? Then make sure to stay until the end to find out. That said, let's begin. Welcome back to Crypto Point. In today's video, we'll give you a complete guide on when to sell your crypto, so make sure to watch the whole video. When do I sell is maybe one of the most often asked topics in cryptocurrencies, even among seasoned traders. The issue is that there aren't many people who can show you how to do the correct thing. They may provide you with all the statistics, projections, and recommendations you desire, but none of them will provide you with the solution you require. It's nearly impossible to predict when and how much to sell your cryptocurrency, since if someone did, they'd have taken over the market. Plus, if they knew when to sell, they'd be reluctant to share that information with you. One explanation for this is that deciding when to sell has nothing to do with the activity. It's more of a series of implications. Knowing your objectives, setting goals, and comprehending charts are just a few of them. The idea is that knowing the answers to these questions will help you make an informed decision about whether or not to sell. This video will walk you through the decision-making process, and hopefully you'll be able to get a good handle on your portfolio. In the world of cryptocurrencies, the old adage, "lost time is never found again," could not be more true. Choosing the optimal time to sell a cryptocurrency is the most important of many essential lessons in cryptocurrencies. Making the wrong decision at the wrong time may lead to terrifying dreams, whether you're trading on the British trade platform, running a business, or working in any other corporate field. It's one of the many blunders made by crypto traders, either because they're in a hurry or because they don't know what they're doing. As a result, they find themselves in hot water after losing their valuable Bitcoin for no gain. The problem of determining the optimal timing to sell cryptocurrency, whether it's the trillion-dollar Bitcoin or any other pricey altcoin, is the same. There's several aspects to consider when selling Bitcoin at the proper time, from significant volatility to altering market trends. Let's take a look at our list of these factors. Technical errors. Cryptocurrency is one of the few digital assets that's unaffected by human intervention. It's well known since it's based on blockchain and operates on the basis of specified procedures. When trading cryptocurrencies, though, you're likely to run across technical issues that can completely change the market in the blink of an eye. A variety of events can influence the price of your cryptocurrency, including hacks, legal issues, exchange bans, and any prominent tweet. When such a catastrophe occurs, the best course of action is to sell your Bitcoin at a reasonable price before its value plummets to sea level. Risk in investment. This is a somewhat uncommon yet crucial factor in determining the optimal moment to sell your cryptocurrency. Purchasing a high-priced or volatile cryptocurrency such as Bitcoin puts your money at risk. We've recently seen big price rises and dramatic price drops in this trillion-dollar cryptocurrency. If you've decided to invest in a highly volatile cryptocurrency, it's critical to keep a close eye on its price chart and assess the risks. If you see repeated price swings or ups and downs, it's best to sell a coin before the predicted period rather than risk losing it all. Type of trading. Numerous crypto traders have shifted to short-term trading as a result of recent volatile price changes in several cryptocurrencies. This approach not only helps you make quick money, and it also allows you to keep your coin for a limited period of time. In this situation, you must keep a close eye on market movements and investigate any offer that appears reasonable to you. You won't have to wait long and will be able to sell your cryptocurrency at a good price. Long-term trading, on the other hand, entails keeping your cryptocurrency in a secure wallet for an extended period of time, and then patiently wait for the price to rise by at least 40 to 50% before selling when it reaches the maximum acceptable price. Most investors who engage in this form of trading get 10 to 20% profit on their investment. See the options. Using the buy low, sell high technique, the first step in determining the proper moment is to look at the possibilities available to you. The crypto world, particularly the trillion-dollar Bitcoin, was not as bleak a decade ago as it's now. As a result, you don't have to obtain the greatest offers every time you look at your screen. Otherwise, everyone would be a crypto billionaire. Setting a goal selling price for your cryptocurrency, which should clearly be higher than what you paid for it, is a solid rule of thumb. We don't recommend being greedy, but rather prudent, because cryptocurrency prices can rise or fall at any time, based on price volatility. In addition, using a stop-loss technique might assist you in determining the best selling price for your coin. Stopping losses. Investors should always be prepared for the possibility that things will turn around. When your coin reaches a specific low, a tool on the crypto exchange will automatically close the trade. People are generally a lot more clear about how much they're prepared to lose than what they want to win, which is ironic. Experienced traders often risk 1% of their capital, indicating that they're willing to take that risk at any one time. That may not appear to be much, but when your budget is $1 million or even more, the numbers begin to add up. If you're on the lower end of the budget scale and can maintain it at a rate that has no consequence on your income, you'll be able to avoid a lot of hassles in this area. Setting targets. To set goals, you must first understand your overarching objectives. What are your expectations for your investment? Some people are in it for the long haul, while others are looking for a quick fix. Realizing where you stand can make a decision much easier and faster. The next step is to determine how much is enough. This statistic is frequently insignificant for long-term investors. They would ride the cryptocurrency's peaks and troughs before even considering selling. These are the people who would buy every price drop and stay unfazed by price spikes. If you're not one of those men, knowing how much revenue you want to make would be beneficial. You should think about two things: your original investment and the amount of time it'll take for you to receive a return on your investment or return on investment. Let's imagine you bought one Bitcoin in 2011 when it was worth $1. After 2 months, the price has risen to $32. You'd make a 3,200% profit if you sold now, which is an astounding average return. When you factor in your initial investment though, you've only profited approximately $30. Most casual traders would be satisfied with the figure, but those with more at risk must make a decision. You can either take what you have and put it into something else, or you may wait and hope for a higher peak. The more you've invested, the more difficult this decision becomes. Assume you purchased 1,000 BTC instead of just one. Your percentage remains the same, but you've now profited over $30,000. You lose everything if you don't sell and the market bubbles. However, if you sell too quickly and it continues to rise, you'll lose money. Things on a larger scale. The act of selling coins isn't unique to cryptocurrency. Since the dawn of time, people have bought and sold things for profit all across the world. Buying and selling stocks is a typical occurrence nowadays. When a firm is doing well, you invest in it. When the CEO makes a mistake, you sell it. When a stock reaches its top though, you have two choices: sell it and walk away with the money, or wait and see if it continues to rise. Those who did not complete this phase were frequently unable to determine what they desired from their investments. If you had invested in Toys R Us in the 1960s, for example, you would have profited handsomely in the 1990s, when the company was at its pinnacle. Those who sold their stocks at that time made a lot of money. Those who didn't either didn't believe in something greater or couldn't make up their minds. They suffered the price as the company began to falter in the early 2000s. Some investors hung on for another decade before it all came crashing down in 2017. Those people were true believers, but the stock market doesn't reward you for your faith. You don't have to be a stock trader to see the significance of letting go. Most of us have undoubtedly held a garage sale at some point in our lives, and selling cryptocurrency isn't much different. You keep something for as long as possible and then give it to someone else who finds more value in it when the time comes. The point is that we all have a broad sense of when to discard items. You're already halfway there if you combine that instinct with technical understanding and extensive investigation. So that's it for today's video. Don't forget to like and subscribe. Also, let's know in the comments if this video was helpful for you.